Okay, beautiful traders, I just want to address this simple issue about exiting a trade when it comes to volatility indices or just any other asset. So I made a video about entries. So one trader requested that I make a video about closing the trades. So if you have any video suggestions, just drop it on the comment below. I will just make a video based on your needs, because this is your channel. This is to improve your trading. So thank you for clicking this video, and I hope it is going to be helpful. So it is going to be short and straight to the point. So some of the things I know that you have heard them from my other previous videos about closing your trade. So my most popular saying, it is that when you enter a trade by price action, you should always close a trade by price action. When you enter a trade by a certain structure, you should always close that particular trade depending on what that structure is telling you. So let us get into it. So for an example here, we have this range here, and then we have the market breakout all the way up there. Let's say then you enter with your buy here on this market breakout. So when you enter with a buy here, you need to know that you are joining the side of the buyers. You are joining the side of the buyers. So the only time you are going to be exiting this trade, it is when these guys here, the buyers, it is when their strength is questionable. It is when their strength is questionable, meaning it will be when you see the opposing side coming in with huge strength. When you see the opposing side coming in with huge strength, that's when you are going to say, now I no longer want to be in this trade, because the most important thing that we are looking into, it is strength, because the market, it is only a display of strength of the buyers against the sellers. So we are going with strength. So the moment you see the flow of the market changing, the state of the market changing, that's whereby you are looking forward to close your trade. For an example, there was a time when I taught about trading volatility indices, that these markets, when they move in a certain direction, they will move in that certain direction for a long period of time, and the moment they start to oppose this direction, there is no need for you to hope. It is just a signal for you that you need to be out of this trade. So let me just show you something here. So you can see that the market has been flowing smoothly here with very small corrective waves, which are insignificant. For an example, this portion here, this portion here. So these two portions, 1, 2, it is small corrective waves. So meaning here the buyers were very strong. So but the moment when the market came here, it broke the flow of the upward move. So when it broke the flow, it went down, and then it went up, and it went down. So here it was clear that here it is sellers market. Why? Because we now have a high which is lower than the previous high. So it was clear that now the flow is on the downside. If maybe you've missed this confirmation of the flow break, where this flow was being broken. So when you see such a thing, there is no need for you to stay in this trade. Then it means that you have to close the trade somewhere around here. And then here is the most important thing. This is going to save you guys from losing profits that you have already made. The issue of trailing your stop. So if you will trail your stop, it is going to help you, because it is going to close it manually when the flow is heavily on the opposing side. So when the sellers are coming in, it will just close it for you. So remember that if you enter here, you put your stop loss here. There is no need for a stop loss to remain here when the market is here. So meaning when the market reaches here, you shift your stop loss to your entry point. And when the market is up there, you shift your stop loss to the other point. And when your market is up there, you shift your stop loss to the other point. So you cannot lose from that, because once the trade turns blue, it cannot turn red. So that's how you should go about exiting your trade when you are trading the market. That's a simple way. Trail your stop and also focus on the market structure. If the flow which you entered with is being broken, for an example here, then that's where you need to stay out of the trade. So that's a simple way that you should use to close your trades. So thank you. Remember to like, share and subscribe. Comment below if this video was helpful. Be blessed. Enjoy your trading. Thank you.